Hello friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about HIL, a building material company that is coming at attractive levels. They have come out with the results just yesterday, and we'll analyze the results and understand what lies ahead for the company. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about HIL, has more requests that kindly support me on Patreon, and if you do that, it will help me grow the channel, help you also ask me questions and geek out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts that I put up from time to time. And also, if you can pay $100 upfront, then you get 1 year access by paying for 10 months. So that's a 16% discount. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay through cards or support me on Patreon, you can also join the YouTube membership through Google Pay or other mechanism of payment, and you get all the access of whatever is happening on Patreon. And also you get 4 live sessions, so one live session every week exclusively for members of YouTube. Now, about the company, established in 1946, it provides a number of building material solutions. It is a CK Birla Group company and provides home building solutions all across the board. Their products include roofing, walling, putty, flooring, etc. A pure play on home improvement and building solutions, and the market cap of the company is around 4,000, 3,500 crores. If you look at the numbers, and these numbers have just come in, so probably yesterday they had come in. So financially, for Q2, that's the September quarter, the sales were up by around 9%, but profit dipped appreciably to around by 70% to 26 crores. And the reason for the dip in profit was high, you can say, raw material cost that has really hurt the business. So high cost of fuel, high cost of you can say other types of raw materials that are being used in building materials has really caused havoc for this company. There's high promoter and institutional holding with only 14% free float, so that's a positive. ROE is around 24%, operating profit margin is around 21%. So if you look at the performance, stock has done very well in the last 12 months. So it has nearly tripled in the last 1 year. It has gone from around 1300 all the way to 4000, something like that, 1400 to 4200. Numbers have been robust. Apart from this quarter, numbers have remained very strong, and there have been good 25-30% growth both on the top line and the bottom line. But the last quarter has been marred by raw material cost and high fuel cost that has really hurt the company. They have been producing decent margins, but the margins have got a real hit now. So I believe that there will be a fall in the stock, a decent, you can say, decline in the stock, but that could be a huge buying opportunity. Valuations are very attractive at the moment, 17 times, and the stock falls even further. I think this could go as low as, I think, 13 times, 12, 13 times earnings, which is unheard of at this point of time in any kind of sector. So in that regard, there is a lot of margin of safety if you invest into it after the decline takes place. So it can be big over the next few years. The sector is on the cusp of a bull run. So you need to understand that if the oil prices get subdued or gets a little bit lower, say around 90 rupees, 95 rupees even, that would be a great trigger for the move in the stock. So what will happen is, because of the high fuel prices and high prices across the board, the margins are taking a hit across, you can say, verticals, across industries. So building material is not something that is away from it. It has been in doldrums for many years, this whole sector, but I feel that after this you can say short term blip that is taking place gets over in say next 2 quarters, things are looking up for these type of companies. Market cap is extremely low for such kind of businesses. I believe that the stock could end up trading at a market cap of around 12 to 15,000 crores going forward 5-6 years down the line, and margins should expand as demand increases and the prices get increased, so there won't be that margin pressure on the business, but the raw material cost has to curtail. That's also extremely important. So it can command higher PE as numbers surge. Right now it's trading at 16 17 times. It could easily trade at 35 40 times, and growth has been exceptional in difficult times for this company. In FY20 also they did reasonably well, and 21 as well. So I think next 1 or 2 quarters could be difficult, but then after that I see a good run in the stock. If you look at the technicals, then there is a long-term support which is extremely strong at around 3500. Right now the stock is around 4400. I think it's going to breach the short-term support of 4200. So do not trade into the stock. It's extremely difficult. I think let it settle around 35 3600. Those will be very decent levels to start accumulating. The stock may have seen the major lows of around 1000 1100 that we saw earlier. It has gone up appreciably from those levels. It may not surge because of the subdued numbers. I think it will continue to fall over the next 1 week. In fact, I believe that the market overall will continue to decline. But it might not fall a lot. It may go down 10-15% from here, and that's just about it. So look for opportunities around 35 3600 to buy into the stock. So can buy for long term at the current levels and on declines. Wait it out for 4 5 years. This could double in the next 3 years. So good 25-30% upside every year for the next 3 years possible. But do not buy immediately because of the result thing that happened about 1 or 2 days back. I believe that you need to wait it out for the correction to take place, and once that is done and the stock recovers, then you probably get into the stock. So basically it is extremely difficult now to get into virtually many of the companies that I have been talking about, because I feel that the overall market looks like in a declining phase, and for the next 2 weeks we could be seeing a situation in which the markets could continue to just meander and then decline rather than after consolidation going up. So 17,000 possible. So in that regard, you'll get opportunities to buy into this company and buy into this company on major decline. So you what you need to do is buy HIL. Probably some stocks should be bought around 4200, and then on declines to 4000 and 3500 you need to increase your exposure. Have a good 4 5 year time frame, and whenever the stock doubles, take some profits off. That would be a prudent strategy, and keep the other stocks, and your average also declines. So over the next 3 4 years it should end up doing well, as would be other building material companies and everything else. So it's a very good stock to be in, and from a long term point of view, because there will be margins and number pressure that would come in because of the raw material cost. So this was my video on HIL. Please like and subscribe my channel, hit the bell icon so you can get my video straight away when I post it. Thanks a lot for watching.